Hello, good evening, guys. So, this is the first weekly outlook for 2025, and new year we are going to start doing something a little bit different. So, we are going to blend both fundamental and then technical analysis together. Okay, so as usual, when I start every time, I just go on DXY, just time, price action, intermarket analysis, and then I jump to the treasury bonds for the intermarket analysis just to have a bias on DXY, and then I jump right on Euro USD, GBP USD, USD CAD, and so on just to find the leadership. Okay, so what we're going to do different here is just very simple. Before starting, so obviously every week we just start with the economic calendar first thing first, but now what we're going to do is quite different. So we start with the DXY and then we check the fundamental. So the fundamental on DXY is going to give us a bias. Okay, so the bias that we are going to have is going to be for the medium and the long term. So what do I mean by medium and long term? So let's just do something very simple. Okay, so basically here we have like the weekly time frame. As you can see, you have a major uptrend. This was in 2021, following by 2022, and I think during that time that's when in the United States they started increasing the interest rate and so on. So basically, as you can see, you have like the weekly time frame. You have the weekly time frame here. You have the weekly time frame. The weekly time. So basically, what do I mean by short medium term? By medium term, I mean 1 month to 2 months. So let's take a basic example. So here we take the XY. Let's say it was in, let's say, July. Okay. So from July, August, September, October. So like almost 3 months, the market was bullish in the weekly time frame. So here, let's see from let's see, okay, October, or let's say for November, December, up to December. So like for 2 months, the market was bearish. Here, if you start from January 2024, February, March, April, the market was bullish. So you have like the quarter, like every 3 months, you can have like a kind of bias, okay, a kind of trend. So when it comes to the fundamental analysis, it's going to help us to find this medium term, okay, or some very large time frame like 6 months, like 1 year. Literally what you have right here. I think 2022, started 2022, and you have like from January, okay, May, June, like 8 months, 9 months, like literally 9 months. You have like the bullish trend. So that's quite the idea for the fundamental. So the fundamental is going to give us like a kind of medium term view, like 1 month to 3 months, or longer, 6 months, 9 months, 1 year. Okay, so it depends. So what do I? Why am I talking about that? It's very important because sometimes when we make our analysis, we can try to invest for the long term. So when we are trying to invest for the long term, we want to invest for like 1 year, 6 months, or when we take a trade, basically, maybe we can hold it for like 1 week, 2 weeks, and so on. But because we don't have like a strong fundamental in the background, it's quite difficult for us to know what to do. So you can just enter. So let me just take a basic example. We enter right here. Okay, maybe there was a particular event. I didn't really check to know exactly what happened at that moment, but when we check that, you can decide to hold it for like few weeks up to here, just like this one. For this one, I'm pretty sure you have the kind of divergence. So with the treasury bond, so we are making lower low. So if you are making a lower low here, that means on the treasury bond you're supposed to make higher highs. So let me just check quickly. Where are we? Okay. ZN one. Okay, let me just take this one. Okay, perfect. New price key. Okay, perfect. So here I think we are making a lower low. Okay, so they are literally opposed. So when this one go lower, this one go higher, and so on. But here when we're making lower low, we have the higher high. So that means there's the manipulation. So when it comes to the market, we have different profiles and so on. So sometimes the market wants to make a move, but sometimes it needs to grab some liquidity, it needs to perform some manipulation. And this one was a manipulation, and we have surely some fundamentals uh, in the background, but for that one I need to read exactly. So here our goal is very simple. Okay, what we're going to do is very simple. Every time when you want to start, you just have a quick overview. And when we talk about a quick overview, it's simply the risk sentiment. Is there any risk event like a war, like uh, virus, maybe there's on a specific event like earthquake. Um, it can be any type of event, like but event that can means that the economy is in danger, like that can means danger for investors. So if in the country, a particular country, they have some issues, no matter the type of issue, they have some issues. Okay, the investors, they will feel like, okay, something is going on. So are we going to put the risk on the table? That means you have risk on. If you have that event, we don't want to put risk on the table, we want to put risk off the table. So that's the first thing. So when you have this kind of situation, that means even if the asset has a good yield, it's not really the best option. And I think we have the case in 2021. I think this one was very bullish, but if you check, if you think euro 2021, I think this period of time, I think you have the yields, you have also the conflict, Ukraine and Russia and stuff like that. So basically, we have to take this information into consideration. As you can see here, we're very, 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 very bearish. So when we have the fundamental, you have like a direction for the long term, and now we can just take our technical analysis. And by the way, just for information, we don't need that. We can just do our technical analysis and then do it. Okay, we have done it for like 2023, 2024, perfect. But sometimes it's always good to add new things to have more edge, okay, and to view things in the long run. So that's basically what I wanted to say right here. All right, so with that being said, let's jump right in. So first thing first, let me check my economic calendar. So that's basically what we have, and I already did a kind of review. So basically, Monday, I was expecting to trade because I only trade US dollar based news based. Oh, sorry for English. So here, when I saw this one, I was okay. Maybe we can have like some volatility during the quarter three. For me, the quarter three is 9 a.m. New York time. The quarter four is 10:30 New York time. So we can trade before, we can book the trade before if you have different profiles, and then the news can just push the price. Okay, or maybe this one is a manipulation, and in the following quarter you can have like the reversal, and then we can continue. So that's why I say quarter three and then quarter four. For Tuesday you have quarter three and then quarter four, basically the same thing. Tuesday you have some news I'm not really interested in, but that's where I'm interested in. So the major, the red news are the ISM service PMI, the job openings. So this one is at 10. So maybe we can have some price which is ranging from London session, New York quarter one, quarter two, but at quarter three we can have a good price action, and quarter three, as you know, falls into the London close, so you can have like either a reversal, okay, or you can just have a continuation. So the continuation like of the New York session. Alright, so I was talking about the week. Okay, our game plan. Okay, so what's our game plan? Monday I was supposed to trade, but I didn't trade because as usual I don't trade on Monday, except I mean some specific scenarios. That's when I can trade on Monday. So most of the time I just love to sit on my hands Monday and then see what the price is doing, and the following days I can try to find some opportunities. So Tuesday, as I was explaining, you have the quarter three and then quarter four, perfect. Wednesday, have quarter two and then quarter three. Our aim is to trade when the liquidity will be injected. So Wednesday, what's happening? Wednesday you have ADP, we have unemployment claims, and then you have FOMC meetings minutes. I think those are just speeches that people will have, and it's nothing huge. And by the way, I didn't say something which is very important. Today we have, not today, this week we have the NFP. So when you have the NFP, sometimes the week can be quite weird. Why? Because they're just trying to accumulate the price until the news released. Okay, so you can have some choppy price action, but that's something we should keep in mind because it can happen. So that's it, and yeah. So Wednesday, quarter two, that's basically 7:30. Okay, so you can take a trade before the news, expecting that the news will push the price toward our target objective. At that moment, it's not even the fundamental; it's just price action. Just price action, because as I said, the fundamental gives us the longer view. But what's happening in H4 in daily, that's another deal. Okay, that's another deal. That's completely another deal. So what's going on Thursday? Thursday there's no trade because on Thursday, I think I just see right here, yeah, U.S. National Day of Mourning of former President Jimmy Carter. So basically, it's the holiday. Friday, that's where you have the NFP, and as you know, as usual, I don't trade the NFP unless you have some weekly template where, for instance, something is happening. So let me just check. There's one weekly template that I also have, is when you have like consolidation and then Thursday reversal. So let's say we are bullish. Okay. Just see if I can have something here. Okay, let's say we are bullish. You can have like a choppy price action like this, and then on Thursday you have a manipulation. And if you are bullish, you can say okay, you can take a trade here, and then the NFP can just push the price right here. That's one way I can think about it. Okay, I mean, but I don't really trade the NFP, by the way. So with that being said, now let's jump in. Let's talk about the fundamental. But before talking about the fundamental, let me just check. Okay, let's just talk about the fundamental first. Here, this is a price action. Okay, but we're not talking about the price action yet. So we come back after, and then just talk about what we have right now. So DXY. Currently, DXY index remains above the 109. As you can see, it jumped like basically before. Okay, it was basically above the 109, but the sensitive price we can talk about the 110. So we didn't hit the 110. I think this one can easily be the next target objective. So here, the US economy is performing quite well, and so here, let me just come back. So when it comes to DXY, the overview, okay, DXY is very bullish, and then you have different reasons behind that bullishness. So when it comes to risk sentiment, there's no risk going on right now because like everything's good in the US, so we have a risk on. Okay, now when we have the risk on, that's where we can put our focus on the GDP, the inflation, and the interest rate. GDP, interest rate. So I was talking about the inflation, the GDP, and the interest rate. So currently, the US economy is outperforming other global economies. Why? Because if you just scroll down, you see that currently the interest rate is at 4.5%. Okay, so all the roads lead to the interest rate when we are in a risk on environment. Okay, so when everything is good, investors will try to invest in some economies that are performing and the economies that are going to have a high return. Okay, currently the US. Right now, all right. So here you have the Fed policy. So yes, also you have the value of the asset. Okay, the value and then the price. The price is basically what we have right now. So let's take um, a bag for instance. Okay, the bag you can have, maybe you have just 10 models. Okay, or let's say no, we have like the bag, the original price of the bag is at, let's take okay, let's say it's a Versace bag. Okay, so that Versace bag is at 500. Let's just choose some shoes. Let's say you have a Versace or Nike, choose something. It's at $500. Okay, $500. Now this one, that's the normal price. Okay, and let's assume the same shoes has been worn by Michael Jordan, or let's say LeBron James, or someone very popular, or maybe it was in the collection of Kobe Bryant. Normally it's the same shoes, but the value of that shoe is no longer the same thing. Maybe it can be like $5,000 now, or maybe even more. So what does that mean? You have the price of the shoes, which is at this current value, the same shoes, but because Kobe Bryant happened, you have that gap is now $5,000. So when we are in the market, currently the market will just uh, display the current price, and with the time it will try to display the expectation of the actors of the market. So when something happens, people will try to anticipate, they will think forward, they will think, okay, now this choose is no longer going to be $500, it's not going to be $5,000. So if you go to an auction, people will try to buy the shoes. Like we try to buy the shoe. Someone can say okay $600. Someone can say $1,000. So it's basically like the market. So here we have the price that will go up, just to reach that value right here. Okay, so here we have a kind of thinking forward. So sometimes the fundamentals are going to give us like the long-term view. So what is the possible value? So that's it. Oh, sorry. What is the possible value, which is right here? So that is our possible value. So when you think about fundamental, when the fundamental is like, okay, this asset is very bullish, maybe we see the price going up. So that's what we call buy the rumor. So the rumor is just, okay, what's the news like? These shoes have been worn by Kobe Bryant. Okay, perfect. That's the rumor. So people will try to anticipate. That's what we call priced in. So the price we um, we take that information, that rumor, into consideration, and then we start moving to reach that value. So you have the price, and then have the future or the foreseen value. Okay. Now let's assume that's what we have. But these shoes, normally they say it is worth by Kobe Bryant. Okay, it's supposed to be worth like $5,000. But when we went to the auction, we realized that this shoes is not the original one; it's just a fake copy. So are we still going to buy it at $5,000? No. Why? Because we have the rumor, but now the fact is not confirming that rumor. So we priced out. So the price, because is not meeting the expectation of the value that we're expecting, okay, people will try to sell because they are being deceived. Okay, we have like the invalidation of our bias or our value, something like that. So yeah, I know I'm talking a lot, but I swear this is for the beginning, just to have the overview how things work and so on. So right now, the U.S. economy is very outperforming. Why? Because the interest rate perfect, the GDP is recovering compared to the rest of the world perfect. And in 2025, let me just show you quickly. In 2025, CME, let me just show you something quickly. In 2025, we have the inflation, which is quite. I think the target is 2%, but currently is at I think 3% or something like that. So when the inflation is high, okay, we try to increase. So they say the inflation and the GDP, they are the leader. So when they grow, okay, we know that the Fed or the central bank will try to increase the interest rates just to fight against this inflation and so on. So when it comes to 2025, okay, as we see, like everything is foreseen. We are seeing the future and we are trying to anticipate. So in 2025, okay, the um, how am I going to say it? Yeah, let me just show this for 2025. So for 2025, as you can see here, they're just expecting one rate cut, like just one rate cut. Currently, the interest rate is at 4.5% currently. So what's going to happen here for the upcoming meeting? There is no change. So we have the interest rate that we stay at 4.5, but what's the case about the other economies? And that's where we try to find the divergence with Euro, GBP, CAD, and JPY. Okay, so I mean everything is just connected. So here I was talking about the Fed policy. So the Fed policy, few rate cuts expected in 2025. But yeah, I mean just two. Like we saw just like two here, but I think based on what we have on Chicago Mercantile Exchange, you have just like one. Okay. Now, this is a rumor. This is what is going to move the price. Okay, because like that's good. And also, you have the fact that Trump is the new president, and with Trump being the new president, okay, I think there's something with inflation. Like he has some things he has to do, and that will lead to more inflation. And as you know, like everything is connected. So the more the inflation is sticky or is trying to grow up, they will try to keep the interest rate as the same. Okay, there will be less okay to reduce or to cut the interest rate. That will basically send the signal that okay the interest rate are still high. Okay, now safe haven demand, you can just keep market focused investor wait for okay performance. Okay, that's just the overview. So when it comes to the interest rate, that's what we have right now. The GDP expansion over the last 2 quarters. So when it comes to GDP, as you can see, the US economy is okay. Okay, like quarter 1, okay, 1.6, quarter 3, 3, quarter 3 we have 3.1. So it's expanding. It's okay. And in the meantime, if you check the inflation, you can see that the inflation is bearish. So like throughout 2024, it went from 3.9, okay, up to 3.3 right now. Okay, so the target objective is 2%. So with the GDP going up and with the inflation quite sticky, we can maintain the interest rate. Okay, because if it was going lower, we can expect now the Fed to cut the rate. And as I'm saying, all the roads lead to the interest rate. So currently the DXY is bullish. Okay. Now, with that being said, let's jump right in and then let's see what we have right here. So when it comes to DXY, we have the quarterly, the 3 months. So let me just check the 3 months. So when we check the 3-month candle, you can see that you have a fair value gap here. Okay, and the price has been ranging, has been choppy right here, because I think maybe fundamental you have a lot of elements that we didn't basically the price was just doing back and forth. Okay, and here you have the rejection block, you have the expansion. So this one was basically retracement. And when we take the IBDA, so basically when we take the last 20 candles or 40 candles, you can see that you have a discount PDR rate, okay, and you have a premium PDR rate right here. So based on what we have right now, you can see that the price is very attracted by this premium PDR rate, and maybe the second can be right, this one. So the likelihood of this price hitting this one is very high compared to the price just retracing and then to go lower. And also, if you remember, we have the fundamental. So this is just 3 months, like 3 months, just one candle. Okay. So what about the monthly? The monthly also we are bullish. So that's what I was talking about, the order flow. Somewhere here, the order flow. The monthly is bullish, the weekly is bullish, the daily is bullish. Our aim here is just to trade in direction of the daily time frame. So the daily can be following the monthly or the weekly program. That's perfect. You can easily take some swing trade, okay. Or sometimes maybe the weekly can be bullish and the daily can be bearish for a specific period of time, like just for like maybe a few weeks, 1 week or 2 weeks. Okay, this one can happen, but our aim is to trade in direction of the daily time frame, the daily direction. So with that being said, here you have the monthly candle, and as you can see with the monthly candle also we are quite bullish, because you have this low, the breaker block, and then we broke this breaker block, and then you have this target objective right here. So in this kind of scenario, we can easily have the price just pushing higher. It depends, but I'm not expecting a huge retracement, even though we can have it. That's possible. Okay, but as you can see here, we are trying to do things step by step. Okay, so the monthly is bullish. What about the weekly? The weekly is also bullish. The weekly is bullish. I was thinking about this inverse PDRA. Okay, that can be targeted, and then this high and so on. But this one is the shortest target objective that I can have right now, and is in perfect confluence with the 110 for DXY. Okay, so weekly bullish, daily bullish, and so on. So this is the weekly. Now, if the weekly is bullish, the monthly is bullish, we don't need to necessarily drive lower, hit a discount in the weekly before continuing the program. Why? Because as long as in the daily you have a continuation, that's perfect. If the daily is giving us the signal that okay, the market is very bullish, and then the daily we hit the daily PDRA, and then the H4 confirms, we can just continue and then trade. So you have daily H1 for the confirmation, have weekly, and then H4 for the confirmation. I mean, this small price action stuff that I use most of the time. So the weekly is bullish. Now what about the daily? Daily we are also bullish. And when I was preparing myself, I was using this. So if the daily is bullish, we can keep that bullishness as long as we don't violate two PDRAs. Okay, as long as we don't violate two PDRAs. So in this example, where is this one coming from? Okay, so as long as we don't violate two PDRAs. So here, as you can see, we have been able to violate this one. But what about this down cross candle? We have the threshold here, and you have the rejection block right here. So the market went down here, hit the rejection block, and have the daily. So if you remember, you have like the proportion block. So when you have a specific bias, the market can just literally retrace, hit that proportion block, and then we can take advantage of the momentum. So here, that proportion block is in the daily. So we can just go in the H4 or H1 just to have some confirmation. And also, don't forget, you have the weekly template. So throughout the week, what are the different templates that we can have? If you are bullish, you can have Monday that can be the manipulation, and then Tuesday that can just continue. You have different, you have the expansion, you have the midweek reversal, Wednesday being the reversal, it depends, or Thursday reversal, it depends. You have different profiles. But at the beginning of the week, of course, maybe we don't know exactly what's going to play out. So maybe by Tuesday or Wednesday, we can have a clear view of what the market is about to do. So right now, that's what I'm thinking about. This one is bullish, but that's not all. So here I just did the time. So time basically the economic calendar. We did the price action. So the price action, what is the current program? All of it is bullish. What are the PDRAs? How the PDRAs? Here we have a retracement, and after retracement we can have the continuation. So the continuation, when we want to trade like with the stop orders, you can just use the stop orders like stop, buy, stop. Okay, so here we have different profiles. You have currently the expansion and then the retracement. So the retracement, that's when I can most of the time just come in, try to find some lower time frame, and then try to take advantage of the trade. So this is just for the XY. Okay, so time, price action, done. Okay, now what about the intermarket analysis? This DXY, if it has to be bullish, that means you need to confirm bearishness in the treasury bonds. So when we take the treasury bonds, it's been a while, I didn't really check the price action, by the way, but as you can see, we are very bearish, and then right here, so here as you can see, it's very bearish. Let me just try to mark this big array. So as long as the treasury bonds are bearish, that is confirming the bullishness in DXY, and I'm good. Now here the next target objective can easily be this rejection bar right here. So far everything seems good. There is no manipulation, there is no everything's good so far. This is the 10 years and this is the 30 years. So here the 30 years also is bearish, very bearish. By the way, we've hit this one, have a discount period right here. So are you going to face some resistance? This one you have to check. So even if you face some resistance, I think our aim is to, okay, we took this high, okay, so you're just going low. So maybe you can just keep pushing low. That's something that can happen as long as DXY is very bullish. Okay, so you took this low, you can target the close, let's see, you can target the consequence encouragement, but let me just target the external liquidity. So internal to external, so internal, we hit this one already, internal to external, external to internal, like just this basic thing. Okay, just to be very simple. So here I think we are also going to be rich, and that's perfect. So currently that's it for DXY. So DXY, you can see the strength coming from DXY. Now what about DXY in euro? Let's come back right here. So previously I was talking about the interest rate expectation, where we're going to reduce the cuttings of the rates. For GBP, when it comes to GBP, GBP is quite bearish. Okay, so it's quite bearish. Stagnation in quarter 3. Okay, so where are we? Yeah, here as you can see, the GDP is dropping. Okay, so if the GBP is dropping, is contracting, that means the likelihood of the interest rate being dropped is quite high. But at the same time, we have the inflation which is going up, but the target is still 2%. So when it comes to stagflation, is when the GDP is dropping and the inflation is going higher. What are they going to save? Are they trying to save the economy, or are they trying to kill inflation at all costs? So that's something that we need to think about. Okay, so here as I'm saying, stagnation in quarter 3 and no growth reported. The Bank of England kept rate at 4.75%, but divided with some favoring cards, some suggest rates may drop in 2025. Okay, So right now, I put is. So when it comes to interest rate, I think the likelihood of the interest rate being reduced is very high. Okay, as expected, reason bad inflation is still persistent. The inflation is still going up though, but I really wanted to cut rate due to weak demand and slowing job, as I said. But by doing that, the inflation is not going to be like. They have a kind of dilemma. No, sorry, I was talking about. Okay, no P. Let's just talk about GBP. I thought I was talking about Euro USD. So here, the bank plans to keep rate high for a while to control inflation, but will adjust as need in future meetings. The GDP is not that good, no growth basically. The inflation is not really going lower. Okay, it's like this one. Okay, perfect. So what does that mean? First and first, let's try to compare the GDP from GBP and in dollar. As we saw previously, the dollar is quite booming. Okay, now what's going to happen? We just need to find the divergence. Right now, they have the interest rate almost the same, but the Fed obviously is not going to cut it right now because the GDP is good, the inflation is going slower. But the GBP, the inflation is going up, and by increasing, okay, that means it's devaluing the money, but they don't want to also increase the interest rate, and it's quite divided because the economy is hurting. So what are they going to do? Is quite confused right now. But one thing is sure, the XY is stronger compared to GBP. Basic. Okay. So with that being said, let's just try to see what we have in the price section. So here, I didn't really update my PDI rate and so on. But here I have the monthly, I think the weekly. Okay, the weekly, perfect. Let me check the monthly here. So currently, you have this one. You took this high, so you have this high, the lower. So this one, the low is here, the high is here. So right now, we have a lot of PDI rays here. Okay, let me get rid of this one. So as you can see right now, the GBP is bearish. Okay, after taking this high, let's see, this was kind of manipulation. So the nearest target objective, we have this rejection block. For me, the nearest target objective is this low right here, and then this one right here. So you have low resistance liquidity. That's what I think we're at the moment. That's what I'm thinking about right now. Are you still going to think about this consequent encroachment? I'm not that sure. But one thing is sure, I'm bearish on GBP. Okay. So now here we can have now in order to select the leadership between Euro and GBP to know what to sell against dollar and so on, we are going to compare Euro and GBP both together, and then you see after that GBP is quite good compared to Euro, obviously. So that's it. Let me just mark this one right here. Okay. First target objective, second target objective. Let me just put in rejection right here. So for the upcoming weeks, let's see for the upcoming months, 1 month or 2, I'm bearish. Okay. Alright, so GBP bearish. Okay. I'm not going to draw a lot of PDI rates here because this is basically the monthly. Let me just get rid of this. The weekly. Okay, the weekly is also bearish, as you can see. And I think last weeks before, I think in December, we were having this PDI rate, and then we are all expecting to see the price dropping lower and so on. So here you have something very interesting. Okay, on GBP. Okay, on GBP right now, we have this rejection block. Perfect. Now this is a weekly, by the way. So due to the proximity, okay, of this target objective, I think the daily, if you want to be like bearish, we don't need to have a deep retracement, but by the way, we can have the deep retracement where the weekly is bearish. Okay, now in the daily H4 we can go bullish, sweep this high and then drop lower. So that's also something that we can have. Okay, so it's always good to have in mind. It's just a matter of probabilities. Okay, so we just need to narrow down our probabilities, try to get rid of the things that are not really going to help us, and yeah, that's basically how it works. So the most important PDRA that I'm using are basically the order block, fair value gap, and stuff like that. So here, okay, have this one. We have a kind of gap somewhere here, gap which is matching with this candle. So basically the up close candle. Okay, we have this. So I'm just going to use the week. We have a huge week here. So yeah, as long as we don't close above this up down close candle, everything is good. So you can just allow the price to go higher, just take some highs and then to drop, and that's where we can continue and be bearish. That's for the weekly. So for the daily, as I'm saying, I'm just expecting the price to do that, okay, in the daily time frame, and then the weekly time frame we just have some wicks, just have this candle range. So currently we are within this candle, so you can just take the high as a total soup manipulation, and then you can drive lower. Okay, so yeah, this one I can just hold it for days and weeks if possible. Okay, so Euro USD. Okay, perfect. So when it comes to Euro USD, let's see exactly what you have right here. So in Euro USD, okay, Euro is dropping, is very weak. Okay, weak growth prospect in Europe with political instability and structural challenges in Germany and France. Potential trade tariffs under Trump increase fears of a trade war worsening Europe outlook. Basically, let's just get rid of this. US economic optimism and Europe challenges are driving the world decline. Okay, basically, I mean the outline. These issues weigh on confidence in UK economic resilience, further pressure on the currency. I didn't read the impact. Basically, that was the end result. Okay, and here with yeah, euro. Okay, with euro, currently that's with the interest rate. I think currently they're at I think 2 point or maybe 3%. They're cutting, basically they're cutting, and I think they're for the upcoming weeks, okay, or months. Um, yeah, inflation is expected. So basically, let me just go back here. The inflation basically is almost at the target. I mean, it's declining, but it's still good. By the way, the GDP is okay. I mean, we want the GDP to be strong, but we don't want the inflation. But most of the time, the GDP leads to the inflation. So if you can increase the GDP and then decrease the inflation, perfect. We are in the best world. So right now, okay, inflation is expected to decrease gradually, reaching in 2025. Okay, perfect. So based on the expectation, the inflation is supposed to decline. So with that being said, they start thinking about cutting the rates. Okay, so economic recovery is projected to be slow with growth forecast. Okay. So I mean, the growth, by the way, stop is great. Like, okay. Now monetary policy, although financial can have easy borrowing costs remain tied to the ECB will continue adjusting policy based on. Okay, so when it comes to GDP is okay. Is quite well. It's not worse. Okay. Moderate economic. Okay, the inflation is quite slow, but overall, I just think that yeah, with the Europe, okay, they are currently trying to cut rates. So we have basically they're all trying to cut rates, but now the XY or USD is less likely to cut a lot in 2025. So that because everything is okay, the economy is strong and everything, so we're good, but they're not close to the target objective. But with Europe, they are close to the inflation rate target, and the GDP is quite okay, and they can easily start to cut interest rate. So as I say, all the roads lead to the interest rate. So easily, as you can see here, the XY is quite strong compared to Europe. Okay, so when it comes to Europe, I'm bearish, as you can see. Unfortunately, we didn't take any trade, but basically it was very bearish for like a while. As you can see here, I think from September, October, November, December, it was very bearish. Okay, and I think it's not about to change right now. Okay, so you can have this trend for like 3 months again, maybe. So that's always good to keep in mind. I know that this recording is quite long, like almost 1 hour, but I just wanted to take the time to give us the foundation before, because we're at the beginning of the year. So for the upcoming weekly outlook, I think it's going to be quite straightforward. I'm not going to waste a lot of time, and I will just go straight to the point. Economic calendar, DXY fundamental, price action of DXY, check with the treasury bonds, move to USD, Euro USD, compare DXY and Euro USD. What is the rumor? What is the fact? Is it confirming what's going on exactly? So that's just the approach that I want to have for the upcoming weekly outlook. Okay, to make it very simple. So right now on Euro USD, as we say, Euro USD is also bearish, like very bearish. Monthly, 3 months. I think I don't have it. Nope, I don't have it. Let me just go to monthly candle. So for the monthly candle, I didn't update anything since a while. Okay, wow, this was my first TP, and we have been able to hit this TP. And sometimes, okay, also something, guys, when it comes to price action, we have the different profiles, right? The market is not going to move like from point A to B like straight line. We are always going to have retracement. Like if you have watched Avengers, there's this guy, Thanos. Like he says something, he's inevitable. Like you cannot, jeez, I don't know how to say in English, but basically you cannot avoid him. Perfect, that's it. So basically, retracement are unavoidable. Okay, so what do I mean? Here the monthly is currently bearish. Okay, the weekly is also bearish. That's quite obvious, right? The weekly is also bearish. Now, are we always going to be bearish all the time? Nope. But do we need to go up here before going down here? Nope. That's why you have the lower time frame. Okay, so when it comes to the weekly is still bearish, but I think you can, as I say, the medium term, the next 1 month, 3 months. So you can even go up here just to sell at premium if that's what you're looking for. And as you can see, it's in the same time within the monthly PGRA, but we don't need to do that. As long as the weekly is bearish and then the daily is following the time frame, the order flow is bearish inside the weekly PGRA, that's perfect. So what is my expectation right here? Yeah, we can have a Smith retracement, but I'm not really like anticipating what's going to happen. I'm just trying to find some narrative. Okay, so for weekly, wow, I just even put it right here. Is very obvious right here. So this is our up close candle, and as the same time you can see we have the gap right here. So yeah, we currently in the weekly time frame, the price is right here. We actually we are able to hit this one. We have equal lows right here. That's quite funny, but I think you can try to sell. Okay, if the daily allows us to sell. So that's the weekly, and for the daily, obviously as you can see right here, we have this one, we have the fair value gap, last week, I think last 2 weeks, I wanted to sell, but unfortunately, I didn't really pull the trigger. But yeah, so right now, I think the daily is also bearish. We have the H4, which is quite bullish. Okay, but the day is bearish, by the way. So you can try to go against the daily, but guys, let's not do this kind of thing. So what I'm expecting right here is quite simple. It's very straightforward. I can think about a turtle soup. I can think about a turtle soup. Okay, you can just take this high, and then after taking this high, you can just find H1, like sell stop. Okay, you can have just proportion block just to try in. I mean, it's just you have different profiles, by the way. So as I'm saying, it's bearish. Currently, the weekly is bearish. The daily is bearish. Okay, and in the upcoming days, we will see exactly how the price will behave. Okay, and based on that, we can try to find some opportunities and then trade. Yeah. So in case this one is holding and then it's pushing, that means maybe in the like short term, like 1 week, okay, 1 week or 2 weeks, you can have the price which is bullish, and so there's a lot of things that we need to think about, guys. But let's just keep it very simple, just the same thing. So all of that is because at the beginning we have been able to find a bias for DXY. Okay, so now we are trying to sell DXY. So if you want to sell DXY, sorry, you want to buy DXY, sorry. If you want to buy DXY, we need to sell Euro or GBP, but which one are you going to sell? It depends on the price action. Okay, and as you say, right now the price action is quite for a short term, so it doesn't have anything to do with the fundamental, nothing. But fundamentally, we know that Euro is more bearish than GBP, but the price action, this one tends to variate like from the weekly time frame, the daily time frame, H4 time frame, and so on. So what about USD CAD? Unfortunately, I don't even trade USD CAD like that, but I'm not going to talk about USD CAD right now. USD GPY, yep. USD GPY is quite interesting. I think I can get rid of USD CAD from here. Okay, so USD GPY, how is GPY behaving right now? So the GPI yen remains stable and a lot of things. Above headline core inflation rose in November. Okay. Prompting bank to consider potential hike. Okay. Okay. Right now. So when it comes to interest rate for the Bank of Japan is at 0.25%. It's very slow. Now, are they going to increase the interest rate? This one we need to think about it. Okay. Let me take okay, what am I interested factors? So right now, as you can see, the CPI GDP is not that great. The first quarter, it was negative. Okay, has been able to recover. Then you have a slow. It's not really booming. And what about the inflation? The inflation, by the way, is at 2.7%. Compared to October, it's quite high. So normally, GPY is supposed to increase the interest rate. Okay, but even if they want to increase the interest rate, like is it? I think I was reading a post. Let me check. I think I have it right. Yes, perfect. Okay, so yep, the yen weakens as BOJ holds. Exactly. I think due to some factors, they decided to hold Bank of Japan ahead its key interest. Okay, 0.25% for a third time in line with our keep and change and dovish government. Yeah, I think that's it. So basically, they decided to keep. They're not planning to increase. So even though the inflation is increasing, they don't want to increase the uh, interest rate. Why? Because it's going to hurt the economy, and they're trying to recover right now. Okay, so which will okay the decision to keep rates unchanged and dovish comment from the governor are expected to weaken the GPY further, which will likely lead to a faster rate hike than they say. How should you say? Okay. It's not done deal. I think there's a lot of things I need to check, but right now on GPY, I mean, is not a done deal. Okay. November suppressing expected. This is high inflation in 3 months. Yeah, BOJ response. The Bank of Japan raised interest rates in March and July 2024, but kept rate unchanged December, citing the need to monitor wage trends, global economic uncertainties, and US policy shifts. Okay, so I think that observation trend, GDP growth, and everything. So when it comes to GPY Japan, they are currently trying to hold it. Okay, they are currently trying to hold it. Okay. Um, Now, are they going to increase and hurt the economy? That's we need to see. Okay, because the economy is not doing so well, and the inflation is at 2.7%. But currently they need to increase basically, but that's crazy, right? So right now you can see that there is not a lot of divergence between DXY and GPY. So right now there's not a lot of divergence, but as you can see, the USD is strong. I mean everything when we compare them, okay, the USD is stronger basically because basically right now, okay, that's also something that I wanted to talk about. Right now you can see that when we check the differential, the interest rate here is just at 0.25%. On DXY it's at 4.5%. So with the DXY keeping and delaying the cuts and the BOG having a lower interest rate and not willing to increase the the interest rate, as you can see there's a kind of divergence. Okay, that's also something I want to talk about. So DXY against GPY, which one is performing? The inflation of of DXY is quite high, so basically they have higher interest rate and everything. The GDP of DXY is booming, so basically the USD is performing against the GPY in a very simple way. Okay, so here the weekly is bullish, as you have some PDR weekly premium PDR rates here. You have this high here, and currently we are having a discount when we take this lower time frame. So weekly is bullish. Okay, what do I think about the daily? The daily is is in the consolidation right now. We are currently within this candle, have the rejection block. So are we going to move higher? That's basically what I'm expecting. So as long as the weekly is bullish, we don't need to have a deep retracement if the daily confirms that there's something to do. So in the daily you have this rejection block, okay, and then we tested once, we came again, and then you have the rejection. That's a good sign. Okay, you can target this as a target objective. So I'm bullish on USDGPY. Okay. Yeah, I'm bullish on it. I'm not even trying to trade right now, but just the side. So for the weekly, for this week, okay, easily I'm bullish. So with that being said, I'm done for the weekly outlook. The first weekly outlook for the second week of 2025, and it took us like 1 hour. So guys, I just want to say thank you and then to wish you a wonderful week and trade safe. See you.